Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, January 12th, 2016. Great to see all of you with us today, so pleased you could join us. And let me send a nice big shout out to our dear friends in archive land as well. All right. So it appears everyone's ready to roll, so we'll get going. So please sit back, relax, and enjoy. And here's Gary. Thank you so much.
Good morning, everyone. Today is Tuesday, Gary's Market Forecaster GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE3 software. Also adhere to very strict money management rules, which include never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So give me a moment as I open up the charts. Okay, now that I have the charts up and the big red cursor, we should be good to go. Let's pick up where we left off on the euro. Again, I still think the euro is going to grind further up before busting lower. That's due to the cycling time frames are still telling us it appears we still have further upside to go. What appears to be in this overall wave count of a 1 blue, combination 2 blue, nice strong down move in a 3 blue. Now another combination in 4 blue. And the key component that everyone needs to have on the chart, level of resistance, is going to be this 110.86. 1.1086. That represents this swing point low for wave 1. And when you have an impulsive wave count, meaning 1, 2, 3, 4, 5, your wave 4 correction is not allowed to go into the area of wave 1. There is such a correction, which is a leading or ending diagonal, where wave 4s must go into the areas of wave 1, but an impulsive wave count, as appears we're under now, does not allow that connection and retracement to go into the area of wave 1. So even though the euro the last couple of days has grinded lower, bounced, yesterday it grinded lower, bounced and made another higher high. Today it's starting off grinding a little lower. I still think we have some upside left before this wave 4 is complete. Then we move lower. The other option is, well, what if it's still the same 1, 2, 3, 4, but the wave 4 ended here, and we're starting to do a 1, 2, 1, 2, and we're going to be moving lower and breaking new lows. That's also a possibility. And the last one I want to call your attention to is, what if this is the A up here, and this big move down is the B, and now we're working on a big move back up in C to complete this correction before then topping and rolling. So as I mentioned yesterday, using the Slice-O-Matic, Ron Popeil, no matter how we slice and dice this, whether it's the A, B, C, it's still projected to go lower. Whether it's the 1, 2, 3, 4 already over, it's projected to go lower longer term. And whether it's the 1, 2, 3, 4 combination 4, it's still projected to go lower. So please keep that in mind. that the only wave count that would allow for price to break above 110.86 would be the A, B, C scenario. But even if that turned out to be the case, which is the lowest of probabilities, even if it turns out that is the case, it's still projected to then turn over and head much, 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 much lower. Meaning not only lower, but taking out 104.61, which is represented by this green line, but it also should stair-step its way down to parity and below. So we have some long-term targets sitting out there going into 2017 and beyond, where we expect the euro will be well below parity, and depending on how high that dollar index can climb, we would expect the euro would be somewhere around that 0.8 range or even below that. So let's take a quick glimpse and view what the dollar index has been under as far as grinding. Let's go to the monthly view to get the big perspective. We're still struggling right around this 100 level. We've tested it, we broke above slightly, tested it, broke above, broke back below, and we're still below that 100 level. So Stacy, I want you to make certain that you put on your charts the dollar index and keep an eye on it as this finally breaks this 100. I'm expecting that not only is it going to break 100, but I'm going to go ahead and turn off my auto scroll over here and go back in time, as when the dollar index took a few years, but it looks similar to what's happening now. It would test and go slightly above, test, 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 pull back, test, pull back, test, pull back, until finally it not only broke that 100 level, but it converted it to support. Then it went on and took a couple of years to grind up towards 125 area. So if this is the case towards that 120 area and above, then at this same moment in time when the dollar index was banging doors and banging on the ceiling of 120, the euro was bottoming down around 0.8 in the 0.86, 0.87 range. So the math is still there. If and when, and the projected path long term over the next couple of years, is that the dollar index will clearly bust above 100, and it'll go on to convert it to support, and it should grind higher over the next few years towards this 120 target and above. Well, if that is the case, and the projections are it will be the case, so that when it does play out this way, you can expect the euro will be back towards its lows in that 0.8 range, moving as we move to 120 and above. The euro will be in the 0.8 level, moving lower, and that is where we expect the euro to go. So why are we bringing this up? Because the dollar index is the inverse of what the euro dollar is going to do. So when the euro dollar is struggling and it's moving lower, it's because the dollar index is moving higher. And when the euro is soaring higher, the dollar index is moving lower. So you get the inverse relationship. And again, keep these targets in mind. This 120 level is expected to come back into play in the coming months, meaning probably the next couple of years, just as before. We tested it multiple times and then finally broke above, tested, retested, and then boom, at this point in time, it took a couple of years to grind its way up towards that 120 target. So that's the key component. Not only is the target of 120 important, but how long it finally took once 100 was taken out and it started to climb towards 101, 2, 3, 4, 5, 6, 10, 15, on its way up to 20. It didn't happen overnight. It didn't occur in just a month or two. It took a few years for that to happen. So the same principle should come back into play. And again, we're struggling to break that 100, but that is commonplace. We'd go above, back below, above, back below, above, back below, above, back below. until finally we soared much higher, test, and then boom. A couple of years later, it grinded higher and higher and higher and higher and higher to reach that target. And that is where we expect this is headed again. So keep an eye on the US dollar index here and watch for when the 100 finally gives way, and not only gives way to break above it, but then when the time frames cycle back against it, it holds as support and bounces off of it to start this big several year uptrend. And that's what we're expected to see. So again, in the inverse of that, the euro is the exact opposite, meaning that when the dollar index finally does in fact make its mark and break above 100, the euro should be breaking down, making its move to these lows that it hasn't seen in many years. So I'm going to turn the auto scroll off on the euro, and as we go back in time, we can see that the euro during the same point in time was down here in the 0.8 range, well below parity. So here's the scenario. It's test, broke and started to go down over the next several years. And as we were reaching 120 on the dollar index, the euro was reaching these lows in the 0.8 range and a low of 0.82 range. So that's why we're expecting once we finally get down here and the dollar index finally gets up toward that 120 and above, the euro should be down here at 0.8 and below. So that's thousands of pips away. As we know, we're at 1.08. We need to go well over 800 pips just to get to parity. And then below parity, we're talking several thousand pips to get down to 0.8. So we got a long way to go for the euro to decline all the way back to the 0.8 range, as well as additional 800 pips for it to go down just to parity. So this is what we're expecting the euro to do, is to be down here in these sub-parity levels, down into the 0.8 range and below, as the dollar index moves back to 120 and above. The euro will move back down here into the 0.8 range and below. Fair enough? So that's what the relationship between the two. So as I go back and turn my auto scroll on, we can see that yes, we're in the midst of a monthly slingshot down on the euro, and in the inverse on the monthly dollar index, we're in the midst of a slingshot higher. So it's the exact opposite as we go through. Let me turn my auto scroll back on the dollar index, and we're slingshotting higher. So that's what I mean by the exact inverse. We're slingshotting higher in the dollar index on the monthly. We're slingshotting lower on the euro dollar monthly. So what does that mean for us to trade the euro? Again, we're in the midst of this subdividing wave count, which appears that this wave 4 is not quite done. And we should see price stay above the low here. And we're in the process of grinding up higher, but we should not go into the level of 110.86. So I'm looking for a lower high over here. I still expect the euro will probably grind towards that 110 level, but no higher than 110.86, top and roll and start heading back down. How are we going to get there? It's through the cycling time frames. So from a monthly perspective, we see long term, this could still stay engaging for several more months as we pull back down and start heading its move towards parity and breaking 104.61. The weekly has been depressurizing and just sitting here waiting for our reversal. And ultimately, once this takes over, I'm expecting this will, once this correction is over, that is, start to pull the euro back down, making new lows, headed down towards this 105.19 slash, here's the low over here, 104.61. And we should see that be taken out in the months to come. but we still need price to finish this correction, and onward and downward we go. Well, we're just sitting here in limbo. We're just kind of flattened out, turning, ready to go, but it's not taking the bait just yet. And that is, we're waiting for the daily to finish its turn. Well, Gary, notice it started to slightly turn out. Yes, it was pushing up, and yes, it's starting to slightly turn, but price action's not responding to it. It's not dropping off a cliff here to break new lows. So I want you to keep an eye on a couple of things. A, we should not see price go back above 110.86. Basically, how much higher can we grind on this Ichimoku template? We could grind back towards the top of the cloud / my 50% retracement. We could maybe go a little higher, but we cannot go as high as a 61.8% retracement, because that would mean we're going to break that 110.86 in order to get there. So we may be taking a little hiatus here as my workforce moves from overbought to oversold, but I'm going to look for signs and symptoms of this 4 hour as it finishes its cycle to start to turn back up, forcing that daily to turn and grind back higher. So remember, it's all about the cycles. Well, why did the daily start to turn over? Because my 4 hour is still pushing a little lower. And we're not coming close to breaching the low over here. And we should expect part of this combination that we're seeing. We should not see some new lows out of this. We should see higher lows as the 4 hour finishes its cycle, turns back up. That's when I'm going to expect this daily that's just sitting here, yeah, slightly turn. I would expect it to turn right back up. But notice, the PAI slightly turned, but the trend momentum has not turned yet. So I'm going to keep an eye on this. As my 4 hour starts to cycle back up, I'm going to expect the euro will grind higher, making a run back from the 108 range back towards the 110 range. And yesterday, as we talked about this live in class, the euro went right to where we said it was going to go. We talked about it being on the close to the purple line here on the daily, and we talked about the gold line on the 4 hour as it went, or the purple line on the 4 hour as well, that we said we expected the euro would make a move toward that 108.50, then bounce off of it. Well, it did that perfectly. It went right to it, bounced, went up, then we tested it again and we squirted just a little bit lower, but it's still, look at the rejection wick here. It's still holding above that 108.50 range, and it's trying to move upwards. Even though the daily turned and hooked out since yesterday, it's still not smoking to the downside. So that leaves us with a weekly. Yes, it's sitting here waiting, but I do expect once my daily finishes that up move, my 4 hour cycles back from oversold back towards overbought. That's how we're going to push towards 110. And then we're going to have a 4 hour back in overbought territory. My workforce, 1530 1 hour back in overbought territory. And we're going to have a daily that is slightly turning out, will ultimately turn and hook over towards the downside, not just turn and hook out on the PAI here, but my trend momentum and price action, both trend momentum and the PAI, will then turn over as we get back to 110 area. This will push up into overbought territory. We'll finish another day or so, a few more days up, and that would allow us to grind and grunt our way higher into overbought territory, right? So picture this as we're painting the Picasso. We expect to see the 4 hour change the perspective of the euro and force it to grind towards 110, which represents on this daily Ichimoku template, it pushes us toward this top of the cloud. And maybe a tad bit higher again, but not all the way to 61.8. Why? Because that's my 110.86 would be taken out if we go this high. So I'm going to look for the 4 hour to change directions as it bottoms and reverses. It's going to pull this daily that's slightly turning back up. It's going to allow the trend momentums to flow a little more towards overbought territory. Then once I have my 4-hour cycling down, my daily cycling down, that's when I expect for the weekly to take over and force this to engage down and force price to go from 110 level, stair step, stair step, stair step, lower, 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 on its way down to this swing point low of 105.19, ultimately taking out 104.61. Along with that same principle of taking 104.61 out and starting its journey towards parity would be the dollar index finally taking out that 100 level and starting its journey towards 110, 120 and above. All right? So please keep those things in perspective, that yes, even though we got a little bit of a dip here in my weekly, certainly waiting, it's just sitting there going, yeah, I'm ready. I still think we're going to see another cycle up because the daily is starting to slightly turn out. Well, shouldn't it turn slightly when my 4 hours moving from overbought to oversold, right? So if my 4-hour trend momentums are moving from overbought towards oversold, the PAI is moving from overbought towards oversold, that would be the catalyst behind this PAI slightly turning. That's okay. But we're going to keep an eye on the trend momentum. Does it force this to not only turn out but move from overbought to oversold? Then I would expect to see the trend momentum cross to the downside and move to oversold. I don't think we're going to see that now. I think we're going to see the 4-hour finish that cycle. Then we're going to turn up. We're going to finish the cycle, turn up. And as my 4-hour trend momentum and PAI, John Young husband, starts to move from oversold to overbought, we're going to grind towards 110. And it may take a few days, day or two or so. And once we're at the 110 level, my 4-hour should be back in overbought territory, back in overbought territory. And ultimately, once we turn back over, right, we grind all the way back in overbought territory, grind down, grind in overbought territory, start grinding down. That daily will then be in overbought territory as well as we grind towards that 110 level. And once we're up here together, we're then going to see a 4-hour topping and rolling. We're going to see a daily topping and rolling. And that's when I expect to see the 4-hour and the daily topping and rolling from overbought moving to oversold. And that's when I'm going to expect to see this weekly will start engaging down. Fair enough? So it's all a matter of the cycling time frames. As we cycle and continue to move and cycle, I expect to see once we turn the 4-hour up, this daily PAI will turn up. We'll continue to move into overbought, so it'll take a few days to do this, probably grinding its way higher. And then ultimately it tops and rolls and forces the connection with the weekly to engage down. And we go dropping like a hot potato from 110, stair step, stair step, stair step, stair step, all the way down, making a run at the previous lows. 105, 104.61 and below. First things first. Well, what if, Gary, that you just talked about, William Bruce, what if my 4-hour, on the euro dollar projection, what if we're expecting this 1, 2, 3, 4 is already done up here, and we're in the midst of that 1, 2, 1, 2, and we don't go on to break a new high here and make a run towards that 110, but we start to break down. And the daily keeps breaking down and moves from overbought down, 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 down toward oversold, and forces the trend momentum to cross and move lower, 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 lower. Well, yes, that weekly will start to be pulled down with it, and perhaps that's because this 1, 2 over here, 1, 2, 3, 4 is already done, and we're subdividing on our way down. Well, again, not only did I say we'd see this start to turn and hook out, but we need to see the trend momentum that still shows angling separation to the upside turn over and head down. That's when I would start to say that wave 4 correction is not still unfolding, it is complete and it's moving down. We're struggling around this 108, 108.50 range from yesterday. We bounced up, we pushed lower, we're bouncing, we're pushing, we're bouncing. A lot of sideways activity. That does not start to hold true to being this is the top in reversal here, and we're subdividing 1, 2, 1, 2. We need to see strong downside movement. If it is 1, 2, 1, 2, and 4 is already done over here, then we should see that robust movement downward, and we're not seeing it so far anyway. So that's why I still believe we're going to get another push toward 110. And all we need is for what? The 4 hour to finish its cycle down to turn up. And when that occurs, I'm going to look for my PAI that did start to turn down slightly to revert back to turning upwards and head toward overbought territory. We've seen this before where it can start to turn down and then boom, the 4 hour cycles back up and it turned right back up and continues to move in overbought territory. See it over here on the far left side? It was turning down and then the 4 hour cycled up, pulled the daily back up with it. The PAI followed suit and it moved into overbought territory. So this could easily follow the same path. So again, my number one priority and number one wave count is that we do not have a top in reversal yet. I think this wave 4 is not complete, and I think it's just going to grind its way sideways to higher as we've been seeing what? Lows, highs, higher lows, higher highs. Then the next day we got a little doji in here, a little hammer top where we went down and it was totally rejected and closed to a positive green. And then yesterday we did get a down candle but still made another higher high as it's grinding, grunting, grinding, grunting toward this 110 level. And yes, today starting out with a little bit of a negative move down. But again, that's the 4 hour moving from overbought toward oversold. And it's not going to take days or days for that to finish cycling. It should start to finish its cycle and move higher over the next day or so. All right? So if I had to go, which one of the three wave counts is it? It is this one. It is the 1, 2, 3 combination A, B, C, 4. And I believe we're in the midst of this grinding higher first before the top in reversal. The second one that it could possibly be as far as percentage wise would be the 1, 2, 3, 4, 1, 2, 1, 2 moving lower. And then the least of the bunch that's likely is this A, B moving much higher in C. So again, if you joined us late, I think this wave 4 is not complete. It's still unfolding. I think we're going to see perhaps just a little more chopping sideways to lower for another few hours of this grinding chopping. But the 4 hours is going to reverse directions. And when it reverses directions and starts pushing higher, we're going to see the daily turn and go back up. And we're going to see price action grind towards that 110 level. And once we reach the 110 level, but no higher than 110.86, I'm going to look for the 4 hour to turn back to the downside. I'm going to look for the daily to turn back to the downside. And as my 4 hour moves from overbought to oversold, my daily moves from overbought to oversold, it's going to pull the weekly engaging slingshot down to start moving toward oversold. And that's where we're going to start to go down, stair step, stair step, stair step, and make our move toward this 105.19 / 104.61. Any questions before I move on? I want everyone with the perfect visual. We know what the software should look like. We know what should be unfolding. And we're going to keep a keen eye on that in the coming hours, because I don't expect this to go busting lower. It's possible, but it's a lower probability than fizzling and turning back up to run towards 110. So what's another way of saying that? You see this swing point low here, this little B wave /2 here, and all this information. Part of this up move of a 1, 2, 3, 4, this initial move up is A. This combination down WXY is my B. And now we're working on an A, B, C higher. Right? So we got initial surge up. We're working on a little move down. And that should turn to another move higher and give me a little 3-wave move back up to finish this wave 4. So I'm telling you, I don't think, even if we see a little more downside, that's okay. I would not expect to see this low taken out. And for those of you keeping score at home, this low came into place right around this 107 range. So as long as, back to the square, as long as we stay above 107, this low here, I'm expecting this little down move to be short-lived. It's going to bounce and go towards 110 level before topping and rolling and heading down. That is this A, B, C to complete 4 here. Well, if it is the lower probability and it happens where 4 is done and we're going 1, 2, 1, 2, then we will not see a new high here and we're going to go on to break 107. And what would that take? Not only is the PAI turning down on the daily, but it needs to continue to push from overbought to oversold, forcing the trend momentum on the daily that is up to cross over back to the downside. Then, if that occurs and we see the trend momentum cross to the downside and we see 107 taken out, then we're going to go with 4 is done here, and that is a 1, 2, 1, 2. Subdividing in 3 of 3 down, working its magic onward and downward. What that means is if we see subdividing 1, 2, 1, 2, Harold and others, we should see very strong, robust movement lower. Stacy, we should see this baby smoking to the downside. That's what a 1, 2, 1, 2, 3 of 3 down means. It's subdividing to get a lot of head of steam to then surge down. Well, even though my 4 hours moving from overbought toward oversold, we still got a higher high yesterday. And we're struggling, even though we're pushing a little bit lower, we're still struggling because we got a long way to go. That's 150 pips to break out this 107. And my 4 hour is on the already moving from overbought toward oversold. So we're running out of what? Fuel. We're running out of fuel for the 4 hour to move down to pull this 150 pips down. And what happened the last several times the euro went down to this area? It bounced, and it's likely to bounce again before coming anywhere near that 107 range. Right? Look how much lower it has to go. It has to go through the purple line, all the way through the bottom of the cloud, chew through that, come down to this battle zone over here, take that out, onward and downward to this low over here in the 107 range, before we can say that, yeah, that guarantees that wave 4 over here is done, and this is part of that 1, 2, 1, 2, and we're definitely moving lower. Well, look, we're running out of real estate here. What happens when the 4 hour starts to bottom and reverse? I believe we're going to hold this supported area. Even if we go a little bit lower, that's okay. As long as it stays above this low here, 107, I'm going to look for this to reverse and head higher when this 4 hour finishes that cycle. So in closing, look for the euro to grind in a chopping up and down sideways to lower direction until the foreman and workforce finishes that down cycle. Most importantly, this 4 hour. And once the 4 hour changes directions and moves up, John, I'm going to expect price is going to move and start grinding its way back towards 110. perhaps a little bit above it, but below 110.86. At which point, this reverses and goes up, this reverses and goes up. It meets up here in overbought territory over the next few days. And my daily that was sitting there, starting to initially turn and hook out, is going to join forces with the Foreman as it moves from overbought, oversold territory back towards overbought. My daily is going to join forces and turn right back up and grind up here. My trend momentums will continue to grind up here. At which point, Harold Glenn, we're going to have the 4 hour in overbought territory. We're going to have this daily in overbought territory. We're going to have price action back up towards this 110 level. And then we're going to look for the top in reversal. Now, what if it is the 4 is done here and it's part of the 1212? Then price is going to break down and take out 107. Everybody good? We see 107 taken out, we get a new low, then we're going to go with this 4 is done. We move a little chop, chop, chop sideways to lower initially till the 4 hour finishes that cycle. Then it starts ramping back up. The daily should ramp with it. Finish that cycle. We're going to expect it's going to grind back towards 110, which in this daily Ichimoku chart here, we're going to look for it to grind back towards the top of the cloud and then look for that reversal. Okay? Pound dollar breaking down. Pound is breaking down, breaking down, breaking down. And where is it going as we said our next target would be? 143.90. And we're very close at 144. So we're just shy of that target. But that's what we're expecting. And this is part of, Stacy, a 1-2-1-2-1-2 scenario. When you start to do the 1-2-1-2-1-2 for our boxing enthusiasts, that's when George Foreman kept hitting Joe Frazier with his infamous 1-2-1-2-1-2. And what happened? Down goes Frazier! Down goes Frazier! Down goes Frazier! Well, the pound is doing the same thing. You keep hitting it with a 1-2-1-2. Its only direction should be, in the case of this 1-2-1-2-1-2, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. That is, it should be going down. At some point, we're going to get another 4 correction, then a 5 down to make a 3, and a 4 up, and a 5 down to make a 3 over here, a 4 up, a 5 down, a 4 up, a 5 down, as we subdivide, subdivide, subdivide. But as long as you got this long stint of 3 of 3 of 3 of 3s down, long term, the pound and the euro are expected to go and make its move at some new lows. Once we break out of 143, what do we have left on the pound? We have the pound when the market crashed several years back. The pound made it down here to the 135 range. And we're at 144, so about 900 pips from here. But I expect to see that as the dollar index moves up towards that 100, breaks it, moves to 110, 120, I'm expecting the pound to start to move down towards 135 and below. So could the pound make a run towards parity? Sure, it could. I don't know if it's going to get that far, but it could certainly make a run towards parity. But I do expect as the dollar index moves back towards that 120 and above area, the pound's going to go below 135 and below. So we still got a ways to go. But remember, it's not just going to break down every day and go lower, 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 out of control lower. It's going to stair step its way down there. So once we take this target out, I will project, and here's another target over here. And then we'll work our way down towards 135. But just like I gave you target 1, 2 in green, target 1, 2 in magenta, this target down here at 143, I'll continue the journey of giving you further targets as we start making a run towards 135. Well, Gary, could we see the pound bounce several hundred pips? Yeah, it's coming. We're going to need a retracement. Part of this down move, we got to get robust retracements. Then a push lower and a retracement, a push lower, a retrace, push lower. Well, in the midst of a 3 of 3 of 3 of 3 down, that's exactly what it's telling us. Once this 3 is done here, which we're probably close to completing this 3 green, we're going to get a 4 green up, then a 5 green down to make 3 magenta. Then eventually we're going to get a 4 magenta up, a 5 magenta down to make 3 blue. And then a 4 blue up, a 5 blue down to make the 3 black. And then a 4 black up to a 5 black down to finally complete this downward direction. So we have a long way to go before 3, 4, 5, 3, 4, 5, 3, 4, 5, 3, 4, 5 plays out. But it means we should expect more stair-stepping in the months and going into next few years down the road. We should expect this to continue. From a weekly perspective, we see the same thing. Yes, we're reaching our target here, but we're still going to need this to go back up. And let's look at from a daily perspective. What does it mean when I'm finishing wave 3 going back into the next wave 4 higher? I'm going to expand that view for a second. So if we go back in line here and we see, well, if this is my 1, 2, 3 green, right, just on the bottom end here, I'll pull it up just a touch so I can have a little more room. Everyone see this swing point low here? If this is my 1 green down, 2 green up, 3 green down, then guess what? Once 3 is done, we should not allow or expect it to rally back into the area of wave 1. So you'll see this change. Once this is complete, I'm going to put a red line. I guess I can go ahead and do it now. But you can see this swing point low here. That's off limits for any type of bounce up in wave 4 to go into the area of wave 1. And then say we get a little wave 4 and a 5 pushes lower. Then we complete this wave 3 magenta. Well then, here's my wave 1 magenta sitting there where that red line is. Well, once that's done, that wave 4 correction back up would be limited to go no higher than this level here. But that's what I mean. These wave 4s can sometimes be very robust as long as it doesn't go into the area of wave 1. Well, that could be hundreds of pips, right? From where we are now at 143 range, say we just rounded off 144, and say this is over. Well, we could move all the way back up to this swing point low here, which is sitting at 146. So we could see upwards of a 200 plus pip rally to the upside and still honor that swing point low. Well, what happens if we're down here in, say, the 141 range? 3, 4, 5. We come down here to this magenta. What if we're down here and say 141, 142, and my wave 3 completes there? Then we could come all the way back up towards this 148 range. Right? 148.03. So from 142, we could climb almost 600 pips in a 1, 2, 3 magenta, 4 magenta, and we could run way back up here. So that's what I mean. Long term, I'm not expecting the pound to just stay in a strong downside movement. Big picture, yes, even with these robust movements back up, honoring these do not cross level, 1, 2, 3, 4, 5. Then check this out. Once the 3 blue is done, maybe we're down at 140, 135, 137, 138, somewhere there. When this 3 blue is done, then we can rally all the way back up to this swing point low, which is sitting somewhere around the 148 range as well, but upper 148, 148.92. So just round that off at 149. Well, you mean to tell me we could be below 140 and rally all the way back towards 149? Yeah. That's what this 1, 2, 3 blue would be all about. So everyone understand that 1, 2, 1, 2, 1, 2 means we're going lower, yes, but we can get these wave 4 retracements back in line up to this level, Then once that ends this wave 3 magenta, we can go back up as high as this level. And then once the 3 blue is done, we can go back up as high as this 149 range. And that means it just takes that much more time for corrections, push lower, corrections, push lower, corrections, push lower, corrections, push lower. And then, of course, when we get up here to the big boy, this wave 2, 3 black down here, then we got a long way to go in which we could have this come all the way back, and it's off the chart to the left over there, but we can have it rally probably over 1,000 plus pips and still not go into the area where it's not supposed to. And let me turn this off. I think we can go back and find that level. Now this wave 1 down here is way further, so we're back to 145. So once we're, hey, I don't know where we're going to be when that wave 3 black is done, but we could be at 120. Now, who knows? And then it could rally as much as a couple of thousand pips not to come in this area of wave 1. So does everyone understand that concept? When you have impulsive wave count, 1, 2, 3, 4, 5, my wave 3 ends, it cannot go back into the area of wave 1. And during the subdividing wave count, you have that repeat, rinse and repeat, rinse and repeat, rinse and repeat, rinse and repeat. So yes, my initial surge higher is limited. As it goes lower again, the next surge higher is a little bit higher. Surge lower, it's higher. Then when you get to the big boys, we're talking 3, 4, 5, 3, 4, 5, 3, 4, 5 multiple times. We could be so far down here that this 145 level up here makes it seem like, well, that's not very, high. Well, it could be a couple of thousand pips. If we're sitting down at 120, then a run towards 145 is several thousand pips back up, 2,500 pips or so, to get to that point. So any questions so far on the pound? If you're short on the pound, I would be taking some profits off the table. So let me turn my auto scroll back on. Move this to the right. As I expect, this will start to show some support and look for a rally back up. I believe this wave 3 is very close to being complete, and we're going to start to see a retracement back up in 4. All right? So let's go to the software. My weekly is oversold but still down. My daily is oversold but still down. 4 hour is oversold but still down. So that's why we're making a run at the level, what we say, 143.90 on Q. Just 1 second. All right. So I'm expecting, that's why we should be peeling off profits, because we've come to the area in which we know we're going to have a bounce. Why do we know and have a feeling for that? Because my time frames are all back toward oversold territory, which means at some point we're going to get that retracement back up. Everybody clear? So take your profits on the short side, look for a chopping, overlapping sideways to upwards correction, followed by another push lower. Then another chopping up and down sideways to higher correction by another push lower, followed by another chopping sideways to higher correction and another push lower. Part of our 1, 2, 1, 2, 1, 2 scenario. We're eventually going to reach 3s going into 4s, then down to reach the next 3 into another 4, then down to the next 3, another 4, down to the next 3. That's part of this stair stepping that's been unfolding for many months now. I expect to continue for many more months. And take profits because we're going to see that wave 4 start to unfold coming soon. Any questions on the pound? What's expected? What the plan of action is? So we're continuing to sell daily degree slingshots, yes. And as long as my daily stays down, we keep selling 4-hour slingshots. And once the daily turns up and my weekly stays down, we sell daily slingshots. Eventually, we're going to need for the weekly to start to depressurize. right? Eventually the weekly is going to need to join forces. And once the weekly joins forces, then we'll look for the monthly to eventually give us a retracement back up at some point. So that's part of the stair-stepping affair. All time frames need to be a part of this equation as they cycle from oversold down towards overbought and back and forth. That's what they do as they cycle up and down, up and down, up and down. So from a software perspective, we're eventually going to need another 4-hour retracement. We've seen them over and over and over to slingshot lower and lower and lower and lower and lower and lower. But that will somewhat come to an end because we need this 4-hour, Stacy and others, to move from oversold area back towards overbought. We've seen this phenomenon before, haven't we? Where the 4-hour stays lower and slingshots lower, 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 and eventually it gets a nice robust move back to overbought territory. That's what's expected in the coming days. I expect to see this 4-hour turn and not only depressurize, but move from oversold back towards overbought. Trend momentums cross back to the upside and move from oversold back towards overbought. That's part of this wave 4 correction. And knowing it could go a few hundred pips higher at the moment, that would allow for the 4-hour to move back towards overbought. And then eventually the daily is going to say, yeah, I agree. It's my turn because I've been riding down here in oversold territory. Yes, we've seen that phenomenon before as well. And it's ultimately going to end up where the daily will move from oversold back towards overbought, oversold back towards overbought. And we're going to look for the same principle. As we expect, this will make a deeper correction when the daily gets involved. But perhaps by then it's maybe the next wave 3 magenta, and it can move back up close to 300 pips or more before it reaches its wave 1 down. Any questions? So Gary, could we go a little bit lower? Yeah, we're testing that level I mentioned. I'd definitely be peeling off profit. Doesn't mean it can't go a little bit lower, but as you can see, daily, 4-hour, all these are in oversold territory. It's due for a bounce. So when it does bounce, John Young husband, I want you to think in terms of, hey, that bounce we're experiencing on the pound is in fact our wave 4 correction going back up. How cool is that? Pull this back down in perspective. But that's exactly what we're seeing this as part of that wave 4 correction, is allowing this to finish its move, to make its correction back up. Again, we're limited. We can't go any higher than this low here, but we certainly can stair step our way. And usually when I have a 3 going into a 4, it should ultimately end in some sort of 3-wave move, finish the correction, then move lower. Everybody good? Just 1 second. All right. Okay, let's move on to the S&P. As we stated yesterday, the S&P is projected to start to break down longer term. The question is it going to give us a nice move higher first? As in many cases, if we go through these different wave counts, and people, I don't want you to get confused, all this different labeling, what does all this mean, Gary? We know what that means, Al. We simply follow the line of progression. As I called yesterday's class, it's the line of progression plus money management equals success. My line of progression is telling me that yes, we should ultimately move down further. Depending on which wave count it is, we could get another nice retracement. And one of the rules of a leading diagonal, part of this little 1, 2, if we're looking at different wave count, but part of this latest little 1, 2, 3, 4, 5, if I have a leading diagonal for position number 1, which would represent this 1 blue, then it's high probability wave 2, as it unfolds, will be deep in nature. Deep retracement. Well, what if it's not that and it's part of this 1, 2, 1, 2 and we're moving 3 of 3 of 3 down? That leans more to the most bearish wave count of these, which would state we're going to go much, much lower in the months and months to come, including but not limited to, Elizabeth, I'm coming to join you, honey. Here comes the big one with the market crash, etc., etc. So is this little bit of a bounce going to be part of this robust wave 2 higher? Or is this bounce part of this, back over here, my A down, my B up, my C down, working on my D up, to then go down in E to make a triangle A, B, C, D, E, to end this wave 4 over here somewhere, to then start with a more bullish outlook and head back up? Or is this part of this 1, 2, 1, 2 moving lower to complete this wave 4 over here and then move up? Or is it in fact, nope, neither one of those. It's Elizabeth, I'm coming to join you, honey, and it's part of this 1, 2, 1, 2, 3 of 3 of 3 down, and we're ultimately not only going to continue to stair step lower, 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 but we're going to go blowing past 1350 in the months and months and months to come, which means I can no longer be in a wave 4 correction. It must be the market crash. Elizabeth, I'm coming to join you, honey. So let's go to this one to show that in the big picture what we're talking about. And here, as we can see, we have part of this movement, and it's an A, a B. We're moving down, and I'll push this over a little bit more, down here in this wave 2 down. So we got a 1 up, an A, B, C, 2, working its way down and finishing B, A, B, moving lower in C to complete this wave 2 over here. This is Elizabeth, I'm coming to join you, honey. Meaning we must see price continue to decline and break below this previous wave 1. So I know there's a lot of labeling on here, but just focus on my cursor. We have wave 1 here, down in 2, up in 3, down in 4. Well, if that is the more bullish outlook, my wave 4 is restricted by going no lower than this swing point high of wave 1, and that's sitting right around this 1350 area. Well, Gary, that's 600 points away, right? A little less than 600 points. Yeah. Well, what happens if it breaks below that? Then it must be this one down here. James, got that? Same rule we talked about earlier. A 1, 2, 3, 4. This wave 4 correction, yes, it can end up and move lower, no questions asked, but it cannot move below 1350 range because that's where my wave 1 is. And if it does break down over the next multiple months, next year, etc., and break below this 13, then it must be Elizabeth, I'm coming to join you, honey. Well, look at this. This wave 4 can come all the way down here and even hundreds of points more before it would diverge between Elizabeth, I'm coming to join you, honey, and this 3-4 correction. Hundreds of points before I can say which one it's going to be. But once it finally proves its intentions and it breaks below this level, then it must be this one. I would expect further downside in excess of several hundreds more points, meaning this is 1300 range, and we're going to go back to 665 and below. So we're talking in excess of another 700 plus points to come down here. So I don't know. Is this 1, 2, 3, we're working on that wave 4 correction? Or is this the A, B, working on the big one, Elizabeth, I'm coming to join you? And again, both of them could go lower. Yes, it can take these out. Yes, it can go lower and push even lower. But at what point does it stop? It can't break this level here. And if it does, slightly goes just even a point below that, then it's over. It can no longer be a 1, 2, 3, 4 going higher. It must be part of the stair stepping down in wave 2. Well, up and until then, we have a couple of different options on this wave 4. One was, is this wave 4 done over here? I don't think so. That's the least likely of a 1, 2, 1, 2, and we're going back up. I don't think that's the case. I think this is off the table now, and we have a wave 4 correction over here in that triangle. So I'll go back to the daily view to show that to you one more time. We have two choices for our wave 4 correction to unfold, and that would be the triangle A, get my cursor back up, my A, B, C, D, E, which means this wave 4 is going to complete higher than the swing point low, part of a triangle, means my C wave, if it ends here, my D wave cannot go above my B wave, which would be restricted to go no higher. And once it's over, it would be restricted to go no lower than this C wave. It must be shorter. So if my A wave is a certain length and it's a contracting triangle, my B wave, my C must be shorter than A, and my D must be shorter than B, so that it shows a contracting triangle. Everybody good? So that would limit how high my C wave can go. It can't go any lower. And then my D wave, if it unfolds in this method, it can only go so high and cannot go above the B wave. Then when it finishes and moves lower in E, it cannot go below the C. Everybody good? So it's part of A, B, C, D, E. Wave 4 over, and we're much more bullish to the upside. The other bullish scenario is still bearish in a sense, that we expect this to decline much further before then finishing, then moving higher. And then the last one is very bearish, where it's part of that A, B, working on Elizabeth, I'm coming to join you, honey, way down here, going down below 665 and below. Everybody good? So I think y'all, we talk about this every day. I think y'all got it down pat. We had multiple wave counts that it could have been. We slowly but surely have taken them off the level, off. So we're left with basically 3. And yes, there could be a little bit more in here, but these are the 3 most primary type of waves that could be unfolding. Which one do I think it is? I think still, there's no way to tell what's the wave 4 going to diverge between Elizabeth, I'm coming to join you, honey, or this one here. But we could have this 1, 2 higher, this C, D, E scenario. But in every case, we no longer expect this to go blowing up here until we finish this wave 4. Any questions? So what does that mean, Gary? That means if this is part of this, look at the magenta level. 1, 2, 3, 4, 5. We don't call this a contracting triangle. We call it an expanding triangle. Why? Because my wave 1 is the shortest, 2 correction. My 3 is longer than 1. My 5 is longer than 3. My 2 is shorter than my 4, so it's expanding, right? So 1, 2, 3 is longer than 1, 4 is longer than 2, 5 is longer than 3, and it's expanding out. When that happens, if this is what's going on, then we're going to expect a nice robust move higher, but cannot go into the area where it originated. So what's going to be off limits is this 2104 area. Everybody good? So Gary, you mean to tell me that the S&P could grind up from this 1920, 1930 area and go towards 1950, 2000, 2050, 2100, yeah, but not above 2104. At which point it should top and roll and head down in wave 3 blue of 3 black. Everybody good? Or if it's a CDE, then again, we're limited by how high we can go. We can't go breaking above that level over here, a little bit higher, because here's my A, there's my B, here's my C. Well, my D cannot go higher than this swing point at about 21.17, I think it is. 21.09, sorry. So we got 21.04 on the 1-2. We have 21.09, 7.75 to be exact, on this ABCDE scenario. And even Elizabeth, I'm coming to join you, honey. We're going to go nowhere near the 2100. We're going to continue to subdivide 1, 2, 1, 2. Then yes, we'll get our 3 down, a 4 up, 3 down, 4 up. But in those cases, if we're at a 1, 2 blue to green here, and we finish 3 green here, then we cannot go up to this low over here. Everybody good? So you'll notice there's a big difference. If it's 1, 2, I can go towards 2100. If it's CD, we can go towards 2100. If it's Elizabeth, I'm coming to join you, honey, the most bearish, and it's 1, 2, 1, 2, we're back to the same principle as the pound. Once 3 is done, we cannot go into the area of wave 1, and that's sitting over here in the 19 range. And that low is 1983. So I could go no higher than 1983. So that's why if we see this start to grind and break 1983, then it sets the tone. It must be the 1, 2 blue or the CD here. Everybody feeling me? Everybody feeling me on this? So is this going to be a robust movement? What happens if we break that 1980, 1983? That's why I told you yesterday, put on your chart, if it breaks that 1980, 1985 range, then it must be either 1, 2 going higher or my CD going higher. What if we go up here and we stay below 1980 and continue down? That's why I believe the highest probability is we're going down, and we should not see price go above 1983. Everybody good? So put that on your charts. That's swing point low. So if I'm using a different platform and I look at my swing point low, I want you to look at this swing point low here. We should not go below that level. It occurred on December 14th, 2015. And my low is 1983 on this platform, which is Windsor Direct. If you're using something else, go to the same low on 12/14/2015, whatever that number is. Price should not go into that area if we're in the big, most bearish counts looking at this movement down. So, where does that leave us? That leaves us with, let's look at the software. Stacy, look at the software. Why do we believe we're most likely going to stay below 1983? Well, yeah, my 4 hours depressurizing, that's good. That's part of a little bounce. That's why we're seeing this little bit of a bounce. My daily is also starting to obviously give some leeway in this depressurization because it's time, it's oversold, and it's starting to depressurize. That's good. In order for us to sell the next daily slingshot, we need it to depressurize to form that slingshot, right? We need it to depressurize to form that slingshot. Well, why do I think it's the more bearish of the counts, not the bullish of the counts? Well, we still should expect further down because, yes, my daily's starting to bottom, but it's going against a weekly smoking to the downside. I mean, literally smoking. Angle and separation trend momentum 1, which is the red and the green. Angle and separation to the downside on trend momentum 2, aqua below the yellow. And my trend momentum, not only 1 and 2 moving lower, but my PAI, price action indicator, is smoking to the downside. So when I have a weekly trend momentum and PAI pushing down, Andres, I have a daily starting to depressurize. That fits well with that 1-2-1-2 scenario, and we should not see any rise back into the cloud. We should be restricted by going up to 1983 and above. Everybody clear? So even on the daily perspective, as we look at this trend line, it broke through the trend line, tested it, it rallied and tested it again. It's struggling to break this, It's got a long way to go before it comes up here into that 1980 range, which is the bottom of the cloud. Well, Stacy, I could see, yeah, this grinding, chopping, overlapping sideways to higher correction. So, but longer term, I'm looking for what? A daily slingshot to sell. There was one here. Dramatic movement lower. I mean, fell off a cliff. Had a smaller degree one here, but still made multiple points. And for those of you that trade, like Andres, trade futures, hey, S&P E-minis, they die and go to heaven when they make a point or two. Well, when we sell slingshots, we're making 10, 15, 20, 30, 40 points, 50 points, 60 points. Far superior to a point or two. So that's why we follow the line of progression. What is the line of progression? It's the cycling time frames. What is the job of this indicators? It's to go from overbought to oversold, oversold to overbought, overbought to oversold, oversold to overbought, and back and forth. Both the trend momentum and the PAI, its job is to go from oversold to overbought, overbought to oversold, oversold to overbought, overbought to oversold, back and forth. Well, we know it can be interrupted through this principle we call slingshotting. That's the direction following the higher trend. So in my weekly is continuing to move from overbought to oversold, trend momentum and PAI are down. What does that mean? Just what I showed you a second ago. When the weekly trend momentum and PAI are clearly down, it means the daily during that period of time should depressurize at some point and slingshot lower. Depressurize, slingshot lower. Depressurize, slingshot lower. And as long as this weekly stays in a downward direction, I'm going to continue to look for that strategy of, and it's right there on the chart, selling D1 slingshots. So as my daily starts to depressurize, I welcome it. Hey, S&P, please do. By all means, please do depressurize. So that when you finally set up for the next slingshot, I'm going to sell the living daylights out of you because I know it should move lower and continue with this downward direction. So part of our wave counts talk about this being a ABC, part of that process in a 1, 2, 3, 4, 5 expanded triangle, which means we should see a robust wave 2 higher. Well, guess what's going to have to happen? In order for us to go robustly up, we're going to need to see price break above 1980, right? My 1983 low. It must break above that. Then we're talking 1, 2 higher or my CD higher. But what else is going to be required on the software? My daily is going to need to go from oversold back towards overbought. Not only the PAI, but the trend momentum will need to cross and start moving towards overbought territory. And it's going to require and force the weekly to join forces. Star Wars, may the force be with you, right? May the force be with you. Largest movie ever. Blockbuster. Well, in order for us to go robustly to the upside in that 1, 2 correction or that CD correction, Andres, we're going to need what now, Stacy? What are we going to need? We're going to need the daily to turn and move from oversold to overbought. Yeah, but we're going to need the weekly to join it. So it leads me down my wave count. Well, if it's my 1, 2, 1, 2, I understand that my daily can depressurize and make a run towards 1980, 1983, but it must stay below it, at which point it's going to slingshot down and go lower and not go into the area of 1983, which would mean that 1, 2 going up is not what's happening, not what's unfolding, or my C going up in D is not what's unfolding. It's part of that 1, 2, 1, 2, and this is just simply the retracement to a lower high and then followed by a lower low. So your trade alert is to sell the next daily slingshot. Well, Gary, that's not helping me because that may take a few days. This thing could literally chop and grind, chop, 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 sideways to higher for days as this starts to separate and then slingshot. But Whether it's today, tomorrow, the next day, early next week, we're going to look at selling the daily slingshot for as long as, right, Harold? For as long as my weekly trend momentums, PAI, are pointing down. So whether it takes 1 day, 2 days, 3 days, 4 days, if this is still pointing down at that point in which the daily is engaging, I'm going to expect to see price make some new lows. And at this point in time, with the weekly pointing down like this, it's unlikely we're going to go breaking above 1980. 1983 to be exact, right? So what should we see? We should see some chopping sideways to higher. My daily depressurize the whole time my weekly stays down. So then I follow the trade alert and sell the D1 slingshot whenever it engages. Which means we should see price action honor the 1983 level by not going into that level, staying below it, and then slingshotting, making new lows. And the last several days and the last few weeks, we've been headed lower. Well, we should be. Look at the weekly. This is why the line of progression plus money management equals success. When the time frames align and they're moving and cycling, that's when I can understand, even in the strongest of an uptrend, we're going to have times when it depressurizes and moves against it. Right? My monthly was moving higher. My weekly started to slingshot higher and 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 higher. Man, that thing went on forever. What is all this? It's not the U.S. economy recovering. It's the government intervention. TARP, QEs, multiple QEs in there, quantitative easing, buying the debt, buying the debt, buying the debt. Economy's not in great shape. Scary to say that, but it's not. So all of this ridiculous climb and recovery has been basically manipulated by the government. So where does that leave us? At some point, we're due for another crash. Is this the beginning of it? Or are we going to get another euphoria where the government starts another buying scenario and we get another push? But eventually, think about what the government's in right now. They're in a rock and a hard place. Well, interest rates were higher and they pushed them down to virtually zip, zerp, however you want to say it, nada. So we're already at low interest rate. Well, they raised it 25 basis points. I don't think they're going to have the luxury of raising it to go too high because the economy is not recovering along with it. So what happens if we need to lower interest rates again, but instead of being in the 5-6% range, it's at 2%? It doesn't have a whole lot of leeway to push interest rates back to zero. Limited. And in some countries like Switzerland, I don't know if you have heard this or not, the banks are charging individuals money. They're giving negative interest. Meaning, hey, you put money in our bank, we're going to charge you just to have your money in our bank. That might happen here. Who knows? We're not paying any interest rates now, Stacy, so it doesn't behoove you to leave your money just sitting in a bank somewhere. That's a joke. You can leave it for the rest of your grandchildren, great-great-great-grandchildren's lives, and you will virtually make zero money. It's basically at 0% interest. Well, what happens if the Fed starts to raise rates? I don't think they're going to be able to go raising interest rates to get back to 5-6%, or many years ago when it went to double digits. I don't think the economy can handle that. So if we start to see the market crash again, where they lowered interest rates to stimulate the economy, they're going to have less stimulation available because interest rates are already low. Pay me now, pay me later. Pay me now, pay me later.
Understood. If you look at D1, how exactly do you make the difference between depressurization and engagement?
Okay, Idris, looking at the D1. We're starting to depressurize because the PAI is turning up. All right, everybody see that? That's what we call depressurization. I'm basically just looking for an opportunity to sell the next slingshot. What is a slingshot? Well, it's when my red/blue or red and blue separate from green money flow and then snap back in this slingshot formation, like over here, like there. There are times when you get huge separation. There are times when you get small separation. And there's even times when you get no separation. So this daily could start turning up. We get another big push downward. And all of a sudden, this PAI that was up just flips right back over. Right? So it's not always picture perfect where we get beautiful separation or large separation. Sometimes it could just be the PAI that was turning up, flips and turns right back over and heads back down. But this is part of that depressurization. What do we need on the daily perspective? We need the 4-hour to move from oversold back towards overbought. So my daily may sometimes not get total separation this way to do a big slingshot like it did the last time. We had multiple days of a rally in which it separated, then flam, snaps back, engages down, and starts to make this next big push. Well, we at least need the 4-hour to move, and I'll start to do my, let me turn my red cursor off because it does not allow me to click on all these things. I have to separate from the red cursor, then click to do this, but I'll start to do it the old school way. When we had this multiple day rally over here, it allowed the daily to move from oversold back towards overbought, form that slingshot, right, for multiple days of it, before it then popped and started to reverse back over. So what did we see in this area as my daily went from oversold territory, made a run back towards overbought? See the trend momentums? I'll put my red cursor back on. Trend momentums flipped, Stacy, and made a run towards overbought. Didn't quite get all the way in overbought territory before it flipped. And my PAI made a run towards overbought territory before it flipped. But what happened during these multiple days as it grunted, took a little sideways path, grinded up one more time, then bam, down we went. Check out the 4-hour. What happened? And this is no matter whether we get big separation or just a little separation. It's that 4-hour moving as we go through that process. It's moving from oversold towards overbought. All right, so I'm going to move that out of the way. And here we go. So what happened back then? My 4-hour went from oversold towards overbought. Everybody see that right there? Went from oversold towards overbought. Then it depressurized to then slingshot higher on cue. Went from oversold to overbought, depressurized to slingshot, big massive slingshot higher to move back in overbought territory before then it turns over and pulls the daily slingshot down, and we see this big massive decline. So Andres, back to that scenario. My daily can start to depressurize early. If I don't get a big move for multiple days where I get separation, my 4-hour will simply just move from oversold back towards overbought, turn, and then flip right back down. Other times when it could possibly happen, like right now, let's go back to the daily. Well, what if this daily just does like this, and it flips right back over without a whole lot of separation, right? We don't really get the red or the blue to separate from green money flow. We just simply see this little blip up, and then it flips right back over. Well, that's when the 4-hour doesn't have the time to move all the way from oversold to overbought. It might be that it starts to move somewhat of the territory, then it too slingshots and reverses and turns over. Right? So the key is going to be, how do I know it's going to be the daily depressurizing, flipping right over, or it's going to stay for multiple days like it did over here to move all the way from oversold to overbought? Everybody see the difference? Oversold all the way to overbought. And because the daily kept forming before it engaged over here, my 4-hour then top rolled and slingshotted higher because the daily kept forming and forming. If I don't get that, Andres, meaning I just have my PAI turn up a little bit, my 4-hour flips and the daily flips with it, then it's still that process of the 4-hour moving towards overbought. So to answer that original question, what does it mean when the daily's starting to depressurize? It means you're going to first see the PAI start to move, and sometimes it can include the trend momentum. Other times you won't get quite that robust movement higher, and you're going to get perhaps either small separation or no separation. But one thing is always constant. It's about the 4-hour moving from oversold back towards overbought, then flipping over. So what happened in that one scenario when the 4-hour move to overbought territory started to turn? The daily was still separating, still pushing up. It didn't turn with it during that initial turn on the 4-hour, so the 4-hour was then forced to slingshot higher. Make sense, Andres? What I'm watching for? So what can I do with the S&P? When during these chopping markets, you trade the cycle of the foreman and the workforce. Is that something new? I see it every day. Every day. Don't trade without the alignment of the 4-hour, 1-hour, 15-30, right? We call the 15-30 1-hour the workforce. We call the 4-hour the foreman. So when I trade, I'm always trading with the 4-hour foreman and workforce, whether it's along with the daily, like an engaging daily slingshot. Well, what happens when a daily slingshot engages? It's because the foreman and workforce are pushing lower to force the daily to engage, or the foreman and workforce are pushing higher to force the daily slingshot up. So depressurization means that we're seeing the lower time frames cycle from an either oversold territory back towards overbought or an overbought territory back towards oversold. That's what we mean by depressurization. And again, sometimes the daily will take days. 1, 2, 3, 4, 5, 6, 7, 8. It took about 10 days. Higher, 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 higher. 4-hour turns over. Daily goes not ready. It then forces the 4-hour to slingshot back up to make another high. Right there. Well, what happens if the 4-hour turn and the daily started to turn? Well, when I sell it, I expect to see another lower low. And it didn't happen until after the 4-hour top rolled, slingshotted higher, then topped and rolled again, that the daily followed suit. So that's why I don't want to catch you off guard. Well, Gary, I've been waiting for days. Marty, man, I've been waiting for days to sell a slingshot, and we never got one. It just flipped right back over, right? This was going up, and then it just flipped right back over, and without any separation, not even a little bit of separation, it just did one of those. Well, that's why I'm still selling my foreman and workforce, watching to see what happened. And back over here, when we started to move and the 4-hour started to turn back over, look, it dipped a few points. Yeah, it dipped some points as it was depressurizing. And the daily during this period right here was saying, nope, I'm not ready to flip over yet. I'm still going higher. So it forced the 4-hour to slingshot up. One thing you can always know, if my 4-hour turns over and the daily's still going up, it's going to force the 4-hour to slingshot up. If my 4-hour turns over and turns the daily with it like it did over here, then we're expecting big things to the downside. And why was that? Well, not only did it pull the daily and engage the daily slingshot down, it was moving in the direction of that weekly trend momentum in PAI. That's why it's still moving in the direction of the weekly trend momentum in PAI. That's why I tell you to look at it. Is this still down? The answer is yes. Then I'm going to sell the next daily slingshot. Whether or not I get, in this case, picture perfect, big separation slingshot to sell, whether it turns into a smaller separation in a sell, or whether it's just one of these that blips right over. It's still the same principle. It is because the 4-hour foreman and workforce shifted downward that pulled this slingshot to engage. It's the 4-hour shifting downward that pulled this one to engage, or it could be this little blip. Sometimes you'll see these, right? When my daily was turning up, my 4-hour did a cycle, started engaging and heading back down. My 4-hour went from moving up to moving down, and it pulled the daily with it. Other times the 4-hour will turn and roll and it won't pull the daily. The daily says, nope, not quite ready. And so it forced it to slingshot up. Then the next time around, it did pull the daily down. So hopefully that makes perfect sense to everyone, that it's simply a matter of the cycling time frame. And as they cycle, they're going to cycle. Stacy, one thing you can put in the bank, guarantee that no matter what the market conditions, market crash, sideways consolidation market, breakout scenario, I don't care what type of market condition, the time frames are always going to cycle. That is a constant and a consistency that over the last decade plus, this is why this is the last system you ever need, because the time frames, Andres, will always cycle. Well, what happens when you get a very small consolidated market? The higher time frames will just kind of sit there and pause, but the lower time frames, my foreman and workforce, are still cycling up and down, up and down, up and down, up and down. And during that cycling process, I look for signs and symptoms. What was my symptom and sign here? Well, my 4-hour went from oversold to overbought. That allowed for this daily to start to depressurize. And once it started to turn over, the daily said, no, I'm not ready yet. So it then forced the 4-hour. Okay, daily's telling the 4-hour, yeah, I appreciate you moving from oversold to overbought, but as you're starting to turn over, I'm not ready. So it's going to force you to then join me because I'm the higher time frame. Everybody clear on that? So in closing, as far as the S&P, I still say we're going to be limited how high we go. My weekly is the one telling us that we're not ready for any type of robust movement higher. If we get a robust movement higher, meaning a 1 going up in 2 or my C going up in D, it's going to require the weekly's help. And Andres, I guarantee, my friend, if this weekly does not turn, right, and what's going to turn first? My PAI is going to turn before the trend momentum. That's by design. Because if my trend momentum would turn first before the PAI, it would take away the slingshot phenomenon. There are times when what? I'm still going down on the trend momentum, and then all of a sudden we're engaging up when the trend momentum is still headed down. And after days of engaging, in this case weeks of engaging higher and higher and higher, yeah, it pulled the trend momentum back to the upside. But early on, when this first started to turn, we're still headed down. We didn't cross back to the upside till later as this engaged. Then it pulled the crossover. So, yeah, if I don't see this PAI start turning based on that daily depressurizing, Andres, what's going to happen? The same thing that it forced this daily over here, forced on my 4-hour. If my daily's not ready to turn, right? My daily's not ready to give up as it's moving higher to turn over. What did it do to the 4-hour when the 4-hour went to overbought territory and started to turn back down? It forced the 4-hour to slingshot back up, right? So what can we learn on this? Well, I'm telling you right now, I guarantee if this weekly does not start to turn and change direction on this PAI, when this daily goes up and forms either a large slingshot, a small slingshot, or the little subtlety, if we're depressurizing on a daily and the weekly says, not happening, Stacy, not happening, then what's going to happen? We're going to slingshot lower and lower and lower and lower. And I know this well in advance. It may take another 2, 3, 4 days before this thing forms and engages. Well, next 2, 3 days as we start to depressurize, what should price do? Chop, chop, chop sideways to higher. And if we get a big slingshot, great. If we get a small one, great. If we get none and we see this just flip over, how do I know when to go back short? Andres? It's when my 4-hour turns back over. Well, what happens if I sell the 4-hour when it turns over, but the daily's pushing up and doesn't turn with it? Then it's a quick scalp to know that, hey, if my 4-hour turns, we start to move, it's turning and price is moving lower. Woohoo! But during that period of turning over, my daily goes, not happening. Then you know it's going to do this. So the same scenario. If my daily's depressurizing now and my weekly's still down and doesn't turn, then what's the daily going to do? Everybody type it in. I want everyone on the same page. If my weekly is still moving lower, trend momentum PAI down now, my daily's depressurizing, and the weekly says not happening, what's going to end up going? We're going to get a daily slingshot lower. I don't need to worry whether it's going to be the case or not. It's always going to be the case. If my weekly doesn't turn as my daily depressurized, it's going to force the daily to slingshot lower. And if it doesn't do it again, it's going to force it to slingshot lower. And if it doesn't do it again, it's going to slingshot lower. Doesn't do it again, it's going to slingshot lower. At some point, the daily is going to turn up and the weekly is going to follow. Either before it gets to oversold or once it finally bottoms and reverses, but eventually one of those daily turns is going to pull the weekly with it. Everybody clear? And that's how cool this is, because John Younghusband, I know this in advance. This is what we mean by anticipating future market conditions before they happen. It's about the ebb and flow of the marketplace. I read so many of the, excuse my French, crap out there. They talk about all these different strategies and use this strategy for this type of move and that strategy and this, that, 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 and this, that. Even the so-called candlestick gurus, yeah, I like candlestick formations, but there are times when I get a low, a high, a higher low, and it looks like a price pattern reversal, and it's simply a slingshot, and then boom, it's done. Well, why wasn't this the bottom here? How do I know that's the hammer I wanted to look for, or this pattern? How do I know? Well, I know when I see this rejection wick, it's on the top of, and combined with a slingshot engaging higher and my monthly's pushing up, yeah, I expect this to be a hammer and a price reversal. Right? Well, why wasn't this one here a price reversal? Everybody see it right there? Well, if we go back in time and I see a big rejection wick, why isn't this the one that breaks the new high? Why did it go lower and lower and lower, dramatically lower, before this hammer here was the price reversal? So whether you use candlesticks, I'm not saying it's a bad thing, but it's more powerful to use when you have the MPA PE3 software with it. And they won't talk about this. Well, this is my hammer and I'm going to buy and go long here, and that's a bad trade. Well, was this one? Well, you see, that's a good one. This is the one you should have taken. Yeah. Well, how would I have known that? Well, my slingshot was still forming here, going down, trend momentum PAI down when that hammer happened, versus the next big hammer happened when we're engaging up. See that, James Brown? I mean, it is powerful, say the least. So no matter what strategy you use, no matter what tactic you use, no matter what you're doing, if you combine it with the trend momentum and the PAI, you're now in the strongest of positions. Same principle. Yeah, I got Elliott wave out the wazoo on some of these charts. And it's like, man, oh man, what in the world? I got a C, a 5, an A, a W, a B, a 1 in parentheses. What in the world, Gary, are you doing with all this? Well, that's just the potential movements that can occur. And during certain corrections, there could be 25, 30 different possible potential moves it can make and wave counts it can take. But I only give you a handful of them at best, usually just 2, sometimes 3 or 4 to give you the bigger picture. But that's why we play the line of progression, Stacy. That tells me what is most likely to happen. And to occur. What's most likely to occur? Well, again, is this the one going up in 2? It's not going to be the one going up in 2 if that weekly doesn't turn. Well, what if it's the C going up in D? It's not going to be the C going up in D if what? my weekly doesn't start turning. If that weekly trend momentum stays down, ladies and gentlemen, guess where we're going? Yeah, we can get a little depressurization, Andres, but we should not go into the area of wave 1, right? And we're limited by doing what? If it's my 1, 2, 1, 2, then if this 3 is already done here, a little prematurely, it's restricted not to go into 1983. Amen? So if I see a rally to less than and stay below 1983, my weekly stays down, then of course my slingshot's going to lead me down further. Down we go. Well, what if my daily starts to push and move to overbought territory and the weekly does turn? And we go breaking at 1983, then yeah, it's either that 1, 2 or it's the CD. See how that makes a difference? And James, what would I tell you next week? When I got a daily trend momentum and PAI moving higher, price breaks up here, then yeah, I'm going to expect 1983, we should make a run towards 2040. At least. Could go towards 2100. Hello? Well, Gary, it breaks 1983 and we're sitting at 1985, 1990. 1990, round it off. It should make a move towards 2040. Andres, how many points is that? 1990, 2040. That's 50 points. And could turn 50 points into over 100 points, because it can go from 2040 to 2100. So when I see futures traders out there and they think they got it all figured out by simply doing, hey, I don't need software. I'm simply going to use my strategy that I use, candlestick formation. I'm going to use this, I'm going to use that. Nothing holds the power of combining with the MPAPE3 software. And utilizing wave counts, well, yeah, I agree. Elliott wave is great, but it doesn't necessarily give me my perfect entries. Because I don't know if this is a 1 going in 2, or my C going into D, or my 1, 2, 1, 2, and a simple retracement. But when I start to add to that equation, I still don't have the questions answered, whether it's 1, 2 Stacy, my CD Stacy, or 1, 2, 1, 2, and it's simply my wave 4 retracement here. I don't know which one it is, but I know what I'm looking for in the software. If this stays down, I'm selling that daily slingshot. Whether it takes 1 day, 2 days, 3 days, 4 days, I'm selling it. No questions asked. Because if this weekly stays in this downward direction, we're going to get a lower high and a lower low. We have no other option to get a lower high and a lower low if this weekly stays down, John. And what should price do? It should honor the bottom of the cloud. That's my 1980 range up here. It should honor the bottom of the cloud. So if I see this form a slingshot and engage and comes near the cloud, I'm selling. If it stays below the blue line here, I'm selling. What's the key? If my weekly trend momentum stays down, trend momentum and PAI stay down, I'm selling the daily slingshot no matter what. Whether it goes toward 1980, whether it stays below this trend line, whether it goes halfway to it. And if it stays below the 1983 when it engages and this stays down, then I'm expecting this what? 1, 2, 1, 2 is still playing out. Not my 1 blue 2 way up here, or not my C D going up here. Everybody see how we paint that picture? Everybody feel confident with that? Well, Gary, does it mean we're going up here? I don't want you to look at this and go, well, he's got 2 different wave counts, a C going to D and a 1 going to 2. Well, Gary must mean price has to go up here. No. My weekly trend momentum and PAI down says it's not going way up here. It says it should stay below this 1980 range and end up slingshotting further down is what it's telling us. So William Bruce, could this just grind and grunt and go smoking to the upside? Yeah, but it's still going to need to pull the weekly. As my daily moves from oversold to overbought, it's going to pull the weekly if it's going to be one of these two. And if it's not one of these two and it ends up being my 1-2-1-2 and we're in the midst of a 3 of 3 of 3 of 3 down, then now we're limited how high we can go. We're only talking about 50 points, 60 points. Can't go much higher, right? Must stay below 1983, and my daily then slingshots down with the weekly. How cool is that? So now I hope you get appreciation. Well, I understand you got all these labelings, and as you explain what they are and what they could potentially be, you go further than not only say this different wave count, but what the software signs and symptoms and behavior is going to be. Weekly turns up with the daily, then it's one of these two. Weekly stays down, then it's this 3 of 3 of 3 down. How cool is that? So James, what's your trade alert? Doesn't change. My trade alert is to sell that daily slingshot. Today, tomorrow, the next day, next week, whether it's 2 days, 3 days, 4 days, 5 days, as long as that weekly trend momentum and PAI are down, I'm selling the next daily slingshot. Well, Andres, back to your original question. Man, I answer questions and I could last 30 minutes, an hour on one simple question. Well, as long as my trend momentum and PAI are down, how is that dealing with the daily depressurization? It's depressurizing on the PAI first. And if this were to go from oversold towards overbought, and my trend momentums were to cross to the upside and give me both trend momentum and PAI both moving higher, and this moves to overbought, and this moves to overbought, then the weekly is going to change direction. Well, what if we get this to depressurize for several more days and this crosses up and the weekly says no? Then we're salivating, waiting to sell that daily slingshot. Whether or not, Andres, we get a small slingshot, we get a large slingshot, or we get a insipid one where we really don't get any separation. It's still tying back into the Foreman cycle down. And back to E-mini traders. I could trade my Foreman and workforce cycle all the time. I will make that point or two, and I will make 10 or 15 points probably on average than just a point or two by simply following the cycles. But it's not enough just to focus on the Foreman and workforce forever and ever, because you want to know whether it's going with the daily or against the daily. And then times when the daily, is this daily going against the weekly or with the weekly? Because that sets the tone, and we're going to keep slingshotting higher and higher and higher, or we're going to keep slingshotting lower, 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 lower. That's how I know, Stacy, not only to get into a trade, make a point or two, or 3 or 4 or 5 or 10 or 15, but should I let that 10 or 15 point trade run to 50 points, 100 points, 200 points? Line of progression, cycling time frames is my line of progression. And the signs and symptoms of those cycles makes up the line of progression. And in honor of Alabama's big victory last night, and man, what a game by Clemson. That was an awesome national championship game. I don't know any football fans out there, but I loved watching that game last night. Fantastic. Back and forth, just like two big heavyweight fighters, punching, beating, and hitting on each other, back and forth, back and forth, back and forth, back and forth. Loved it. Well, it's part of that line of progression as well. They look for their receiver, they go to the first person, they got to look away, go to the second, third, fourth. They got different outlets. If this man's covered, you go to the next one. If he's covered, you go to the next one. Same type of thing with the line of progression of trading. As my time frame cycle, I'm going to look for what's next. And what's next is my line of progression tells me, Andres, if my 4 hour starts to top and roll, my daily is moving higher at that point, and the daily doesn't turn with this initial top and roll, then it's going to force it to slingshot higher. Over and over and over. like we saw in that example. So in closing on the S&P, if I had to go down the path to say which one is playing out, we're definitely moving lower in one form or fashion, either this wave 4 down here or this 3 of 3 of 3, Elizabeth's the big one. Why are we not ready to see this big move? Well, remember, even if we go up this way, it still means this 1, 2 blue is going to come down in 3 blue and continue much further, and could be this wave 4 further down the line. Well, if it turns out to be the CD, then my downside pressure for this wave 4 to end in this triangle is going to be limited. Where if it's the 1, 2, we're still going to come way down here, best case scenario, right? So if I don't see the weekly turn, I'm selling daily slingshot, and I'm expecting price to continue lower. At some point, if we break down here, which I believe we will, just like I thought we'd break this 1948, I believe we're going to break this next level, 1860. And we're going to go on and break 1830. And we're definitely going to come below both of those to make a run down here, as I believe this best case scenario wave 4 is not complete. And I don't think at this point, till signs and symptoms change, James Brown, that we're in the midst of a 1, 2 going higher or my CD going higher. We're breaking down, going lower. The question is it the complete wave 4, or is it Elizabeth the big one, I'm coming to join you, honey? So up and until that weekly changes direction, I'm not going to expect massive moves higher of hundreds of points. Well, Gary, could we see a reversal come and go towards 1980? Yeah. That's a massive, and futures contracts and trading, right? E-minis, 50-point move is huge. Honor of Donald Trump, huge, huge, if it does. Yeah, but it's still about the cycles. So Andres, closing, sell the next daily slingshot today, tomorrow, the next day. In the interim, my bias is that we're going to stay below 1980, and we're going to get a little chopping up and down sideways to higher rally as the daily depressurizes. And once that foreman and workforce flips, I can sell the S&P. Yes.
Roger says monthly reinforces the possible strong downside, right? Question mark.
Monthly is in agreement with further downside. Oops, wrong chart. Let me do it with the software. Go back to the daily. And yes, Andres, the monthly is enforcing the weekly, stating that my daily starting to depressurize. Good, we need that. Remember, in order to sell the daily slingshot, Stacy, I need the daily to depressurize. So this is expected, and part of depressurization is this chopping up and down sideways to upwards move. What is that? If I see a lot of sideways chopping up and down overlapping price action, that is conducive to a downtrend continuation correction, right? What is it correcting against? Always ask yourself, what is this correction against? This previous down move. So back to that question. My weekly smoking to the downside, trend momentum PAI, and is the monthly giving force to that? Yeah. Andres, this is so huge that we had a monthly slingshot up that failed. High, low, lower high, we're working on a lower low. And based on just this view right here, Stacy, we call a weekly slingshot up that fails or a weekly slingshot down that failed, meaning in the case of the slingshot up that failed, we had a high, a low, a lower high. It's turning and hooking out, and we should see a new lower low. So Andres, you're right on target. Golden star, my friend. Because on a weekly, we expect to see a run at the previous low and below, just like we did on the Russell 2000. Same thing here on the S&P. This is a monthly engaging up, failing, high, low, lower, high. What's next? We need the lower low. So the S&P should drop down towards this 1860/1830 here, low and below. And as long as my weekly trend momentum and PAI point down, my monthly trend momentum and PAI point down, that's exactly where we're going. How cool is that? So that's why I expect to see this 1980 range hold and go no higher than that. It might not even get close to that, but I know what the strategy is. As long as my weekly trend momentum and PAI on the weekly and the monthly are down like this, I'm selling that daily slingshot. And when I type it in on my little text here, it shows up on all time frames. Right? So yes, if this is Elizabeth, I'm coming to join you, honey, then guess where we're going? We're not only breaking this low out, but we're going to stair step, come off the cloud, bounce, slice into the cloud, chew through it, break through the cloud, onward and downward. Here we come down to 665 and below. And what would that look like? It's going to look like my trend momentum in PAI moving from overbought all the way to oversold. We're just getting started. Everybody good? We're just getting started. We hadn't even started our descent yet. What happens if we go month after 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 month, and we go into 2017 and beyond, and we're moving all the way from overbought to oversold? Excuse me, market crash. Back towards 665. Well, Gary, is it possible we could move all the way to oversold? Right? This could come all the way down here and start to turn up. This could come all the way down here and start to turn up. And then we get the month of the slingshot lower and lower. Yeah, that can happen. Because we're much higher than we were. 14 versus here. We got a long way to go to come all the way back down to 665. And in order to do so, it's going to take at least this to move all the way to oversold, but might even include coming to oversold and then the monthly slingshotting lower and lower a few times. Fair enough? Well, what does that look like? It looks like our Aussie dollar. Right? We showed the Aussie before. Go to a monthly perspective. What happened to the Aussie? The monthly move from overbought to oversold started to depressurize, slingshotted down, depressurize, slingshotted down, depressurize, slingshotted, 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 and it's on its way down again. Everybody see this? So could our S&P mimic this? When we get down to oversold territory, could we slingshot lower and lower over the coming years as we move all the way down to 665 and below? Yeah, that's what the Aussie's doing, as it's making a run towards its previous lows. Fair enough? How that makes perfect sense as we go through the process. So long term, Stacy, as we look at the dollar index moving above 100 towards that 120 and above, guess what the Aussie's going to do? It's going to move back to 0.5 and below. As the euro moves to 0.8 range and below, and the pound moves to 135 and below. That's why the dollar index, yes, the economy is not strengthening and growing. Wages are shrinking. The government makes up these non-farm payroll numbers, and you know about that. Anybody that's no longer looking for a job is no longer considered unemployed. How ridiculous is that? So our unemployment rate's at 5%, 7 to 5%. Are you kidding? Quadruple that. Because people are no longer looking. There's nothing out there. All right, so in closing, Aussie's projected long term to go down. Monthly starting to engage back down. We had a nice rally. We're starting to turn over. We expect to see further downside. We're double bottoming. I expect to see this blow and continue down. I also expect to see the dollar index eventually break the 100 and start moving. But this is not out of the question for the Aussie to come back down here. And even when we rallied to make 110, if you go back to when I was talking about this, I told one of our members, I said, hey, this is going to go from 110 all the way back down, looking at some new lows. Very likely at least for a double bottom. So the whole time we've been moving lower and bouncing, I kept saying, that's not the bottom, that's not the bottom, that's not the bottom. Even this bounce, that's not the bottom. As we make another bottom, I don't think that's the bottom. I still think we're headed down here and even below. Not out of the question. Russell? Andres, where's the Russell headed? Hey, back to the same status. My monthly continues to move lower. We could go much, much lower. Are we going to get a little bit of a correction? Yeah, we need that on the daily. We need to depressurize to sell the next daily slingshot. My weekly's a little bit different on the Russell than the S&P. It's a little further along, but it's still the same direction. So what am I going to do on the Russell? Ditto to the S&P. I'm going to sell that daily slingshot for as long as my weekly trend momentum and PAI are down. I'm selling the daily slingshot. And we went straight to these previous lows. We broke the lows out as expected, and it's still expected much further downside. Well, my weekly, even though it's starting to get toward oversold territory on the PAI, trend momentum still have a ways to go, and they have huge angling separation. Trend momentum 1, I could drive a 18-wheeler through that separation. Trend momentum 2, strong wide separation, all pointing down. PAI, yes, moving toward oversold, but pointing down. And if that's not enough to convince you the Russell's going lower, as the S&P is projected to go lower, check out the monthly. Ditto. Monthly slingshot up, got a high, got a low, got a lower high, and notice the difference on the Russell. It's already made a lower low. Stacy, see that? This is identical what I just showed you on the S&P monthly, but the difference is the S&P monthly hasn't made a lower low yet. The Russell clearly has, and that's what I'm expecting the S&P to do as well. So I think that 1860/1830 flash crash bottom is in jeopardy, because my monthly engaged up failed and is moving lower. My weekly's moving from overbought to oversold, moving lower. So all road signs and symptoms lead me to further downside on the S&P and further downside on the Russell. So we're going to get a little bit of correction. What's my trade alert? Well, as long as my monthly trend momentum and PAI are down, my weekly trend momentum and PAI are down, I'm going to do what? I'm going to sell daily slingshots. I just need it to depressurize to sell it. Depressurize to sell it. Depressurize to sell it. And again, what do we see? Chopping up and down, sideways to higher, depressurization, and I'm looking and waiting for a daily slingshot, whether it's a little one, a big one, or a very small one. Fair enough? Sell the daily slingshot on the S&P, sell the daily slingshot on the Russell, and yes, up and until then, expect more of this chopping up and down sideways to grinding higher. But the big one to salivate over is going to be that daily slingshot. This was a thing of beauty. It was grinding from the bottom of the cloud to the purple line. It tested once, pushed lower, tested again, boom. Slingshot out of there, dramatic drop. And how did we know this was going to slingshot lower? Because my weekly the whole time was moving trend momentum PAI down. Well, why would we expect the next daily slingshot to produce another lower low? Well, as long as my weekly trend momentum and PAI are down, combine that with a monthly trend momentum and PAI down, that's exactly where we're headed. So Andres, can we see this decline further and come to the cloud here and bounce off of it? Yeah. We could see it chew through the cloud and break below the cloud. Yes. And if it's Elizabeth, I'm coming to join you, honey, then we're going to stair step our way down to these lows over here and maybe even below it. Fair enough? So we got a long way to go. Hundreds of points. Hundreds of points on the Russell if it is the big one. And up and until my weekly and monthly change directions, that's where we're headed. GDX breaking down, gold's breaking down, GDX is breaking down. That's why I told you I don't think this is the big one going up. I still think we're going to break down and head down to 1260, likely to head maybe $10. Once gold finishes its down move and breaks into 1,000 and below, we're going to look for a bottom reversal, Stacy. We're going to have some fun in the coming years. I hope each and every one of you stay members for the next several years as we start to play these GDX, GGN on gold play, OAS, Oasis on oil play, and once those respective commodities bottom and reverse, these very low ETFs, stocks, etc. we're playing are going to end up doubling, quadrupling, on and on and on once the bottom reversals come into play. Well, how do I know oil prices are bottoming and reversing? How do I know gold prices are going to bottom and reverse? We're going to look for signs and symptoms of that. Not only lows, highs, higher lows, higher highs, higher lows, higher highs, but the status of the monthly, the weekly as the S&P, etc. are moving lower. We're going to look for that to start to move higher on these. Well, obviously, my daily moving lower on GDX is not saying we're going up and we've bottomed and reversed. My weekly is engaging over, says we're not going higher. And my monthly says we're not going higher, we're still going lower first. So it doesn't matter if I trade stocks, futures, commodity, Forex, doesn't matter the financial symbol, the same rules apply of trading the foreman in the workforce, looking at my signs and symptoms, my line of progression, plus money management is my success no matter what I'm trading. No matter what I'm trading, it's my line of progression, signs and symptoms. So let's finish the day with a quick review of Black Gold, Texas Tea, the Beverly Hillbillies, and our yellow gold, and then we'll call it a day. So let's go over here to black gold. Still grinding lower. Where's it headed? Anybody remember where we're going? 29.20, 29.50, 29.20. That's our next target. And then we're going to get a little bounce and another push lower. And where? 26.10. Could we go a little bit below that? Maybe. How do I know I'm continuing to go lower? Pretty simple. I'm following the line of progression. My weekly trend momentum in PAI, yeah, depressurized. See it right there, Andres? Got a little mini separation. But my weekly trend momentum down, PAI down. Yes, oversold, but still down. My monthly engaging, still down. Yes, oversold, but still down. So what's the strategy? Continue to sell daily degree slingshots. And as long as my daily trend momentum and PAI point down, what else do? We sell 4-hour slingshots. At some point, my daily is going to depressurize to form another slingshot. But up and until then, and I'm waiting for the daily to form, then we have the option to sell these little 4-hour slingshot, 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 slingshot. How low are we going to go? I still think 29.50, 29.30 should come into play, then a bounce, then back to 26, and maybe below that. So Stacy, I don't know if you were in class the other day, but one of the New Year's classes, I talked about the strategy behind gold and oil, and that is what I just mentioned a moment ago. Oasis is a great stock we can buy. Yes, it's moving lower. It's breaking the $6 range, headed towards $5. Good. Love it to get to $5, maybe even a little bit below it. But once oil prices bottom and reverse, that $4 stock, $5 stock can go to 50, 60, 70 and above. Well, it's easy to buy 100 shares of a $5 stock than 100 shares of a $500 stock. Amen? I buy 1,000 shares of a $5 stock for less than I can buy 200 shares of a $500 stock. So you get the same principle. So yes, I expect Oasis to go lower, but minimally lower, because eventually once we bottom and reverse, we could see it go back into the upper quadrant of $50. From $5 to 10, that's a double. From 10 to 20, that's another double. 20 to 40, that's another double. Double, 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 double. Back towards 50, yeah. And if oil prices continue to do based on this, whoa, look at this. If this is correct, and I'll put a big red cursor on this one, if this is my 1, this is an A, all of this correction B, subdividing 1, 2, 3, 4. My wave 5 down is now subdividing 1, 2, 3, 4, 5, etc. 3 of 3 down, working on this move. Once we bottom and reverse, we should see in the years to come, oil prices go back and make a run at 147 and above. Well, it took years to get up there, multiple years to get down here. So I'm not going to say, Stacy, as soon as you buy that $5 Oasis stock, it's going to go to $50 and $100 in a month. No, it's going to take years. But that's a stock we can buy and hold. Because once oil prices start to rebound and move up, it should ultimately, years down the road, break 147, make a run towards it. Well, if we go anywhere near 147, Oasis is going to be $50, $60, $70, $80. And we're buying it at what? 5, 4? Who knows? Waiting for the reversal. And it's not buy and let it go to $8 and hurt and close and get out. It's going to be buy and hold for a long time, many years. And yeah, I can scale in, scale in, scale in along the way. So even if I have $10,000 to buy stock and it's down at $5 a share, I'm not going to just buy thousands of shares all at one time. I'm going to buy some, let it move up. When I get my time frame saying we're ready for a big dip, I'll sell some, make some profit, and then scale in when it bottoms again. So buy, scale in, buy, scale in, buy, scale in, buy, and continue to hold some of that premium along the way. That yes, I will have several shares starting from its low price to its high price, and I know I need to hold it for years, but along the way I can buy and scale in and out of it. Why let it go to $20 and pull back to $10? Why not sell up here, let it pull back, and then buy again at a lower price? Scale in, scale in, scale in. So in closing, oil prices are still projected to go lower. No surprise there. Those of you that have been with us for some time, what did I tell y'all when it was way up here? We're due to run towards 35 and below. And you thought, no way. Structure-wise, yeah way. It's exactly where we're headed, structure. And up until price proves its intentions by breaking and invalidating levels it should not break, then that's exactly where we're headed. And my line of progression kept saying, yep, it's going to move lower and lower and lower. Y'all remember up here when we were bouncing between here and we had that little bracket order? And we said if it breaks below here, we're going to go short. If it otherwise, we expect it to go back to 50. And sure enough, it rallied to 50 before then it topped and rolled on cue. We've followed oil prices very closely. It's all about the ebb and flow of the market. Ebb and flow of the market. You've heard that term? You hear it from time to time. What's the ebb and flow of the markets? All the ebb and flow of the markets is the cycling time frames. Ebb and flow, cycling time frames. So line of progression plus money management equals what? Success. So again, I'm looking for a bounce coming off of this 29 range. A little bit of a rally. If this is part of my 1, 2 in black parentheses 3 down, and say that's the end of 3 there, well then we can't go into the area of wave 1. So we can't see any real robust move higher. It's limited. Well, what if this wave 3 is nowhere near done and we're looking at a subdividing 1, 2, 3, 4 blue, which in a daily perspective, that's what we're seeing. Let me go back to the daily. So we're subdividing out of this 1, 2, working our way down in that 3, 4, 5 maroon, subdividing into a 1, 2 black, 1, 2 blue, and as we move lower to our wave 3 blue, now we're looking for any rally higher, Stacy, to stay below 41.20. Everybody type in yes? Now with me? So Gary, say that again. Well, if this part of my 1, 2, 3, 4, 5 and this ends and I got a 1, 2, 3 blue, just as we stated over here with the maroon, 1, 2, 3, 4 could not go to 41.20. Well, now we're up here to this wave 1. So my 3 blue, once it's done, and it was target down here at that 29.50, 29.20 range, so about another $1, we bounce and start a wave 4 correction. Yeah, we could go to 41.20, doesn't mean we're going to break it, but we could. We just could not break this low here, sitting at 45.78. So what does that mean? Wave 4 blue up is not allowed to go into the area of 45.78. So you'll see this line move up once 3 is done, and we'll start talking about expected to stay below 45.78. And then my wave 3 blue go to 4 blue, we continue down. Then we talk about a wave 3 black. Well, I could be down here at $26. And if my 4 black up, then we can't go into the area of wave 1. So that's why we can not only reach both of these targets, 29 and 26, we could go much lower in my 3, 4, 5 scenario to end this. So we might be a few months away from a bottom reversal. I'm not trying to imply that my bottom reversal, if we hit here and then here by next week, that's our bottom reversal. No. We're going to play the subdividing wave counts out, but we literally could be months down the road. How do I know oil prices are going to bottom and revert? We're going to see the software show signs of bottoming and reversing. We're going to see slingshots down fail, and we're going to end up with lows, highs, higher lows, higher highs. And in the talking box, whether it's CNN, comedy, or whatever you want to listen to, any of those talking heads, they're going to start to tell you about oil reserves. When the oil reserves start to what? Deplete, and we go back with the old economics of supply and demand. Demand is high, supply is low, price is going to go higher. Right, Stacy? That's nothing new. When demand is high and supply is low, prices go up. What's wrong with this picture right now? Demand is pretty constant, but supply is overwhelming. We have way too much oil reserves. So it's a hated commodity. But that's where you make your fortunes. That's where you make your big bucks, on hated stocks, futures, commodities, Forex. And as this finally bottoms and reverses, I can assure you, based on the big structure of 1, 2, 3, American down there, mile 2, moving up in 3, we're going to see price break 41, 48, 50, 62, 91, make a run at that 147 in the years to come. But up until then, we still have further downside to go. So I say at least in the 20s, and we're heading 20s now, and we should go to 26, and that's just my 3, 4, 5, 3, 4, 5. So we could go below 26 and head lower. But I still think at least this level, if not further. And we're probably about 6 months out, maybe. before we get a reversal. I do expect a bottom reversal at this point in time within the year 2016. Stair step further down. How low can we go? I don't think we're going to get to $12. There's a big green line down here, not to imply that it's going to get that low, but depends how we subdivide. We're going to be in the 20s. 12's not too far from 20s, but I would think in the next 6 months or so, we should be talking about a bottom reversal. We'll hear CNN and some of those other talking heads talking about NBC, CNBC. Doesn't matter. They're all the same thing. Any of the talking heads, listen to any station out there. We do see oil reserves released every month. And when those start to deplete, that's when we're going to see supply and demand take over, and we're going to talk bottom reversal. Structure-wise on the software, what's it going to look like? Well, my lower time frames, 4-hour slingshotting lower because my daily still down. Weekly, down. Yes, oversold, but down. Monthly, yes, oversold, but down. That's not conducive to a bottom reversal yet. So what will we start to look for? I want to see the monthly start to turn up, the weekly, the daily, all start turning up. Then as my weekly turns up, we should see a daily slingshot down fail, giving me a low, a high, and a higher low. Then eventually the weekly is going to try to slingshot lower as the monthly's turning up, and we're going to see another low, high, higher low. And combine all of those with the top and reversal, high, low, lower, low scenario. That started this big down move. And yes, my monthly bottomed and reversed and slingshotted lower. Even during this phase here, during that big correction, what was I telling everyone? I don't think that's the bottom yet. It wasn't, because structure-wise, we should go lower than this. We have. So yes, I'm going to look for price pattern reversal, my trend momentum, my price action, everything moving higher, monthly, weekly, daily. Can I then start to buy and get in a little stock action? Yeah. Whether or not it's the true bottom reversal or not, when I get a monthly, weekly, and daily started heading up, that's when I expect to see Oasis go higher. Whether or not it's another correction then lower, but hey, once it finally bottoms and reverses, it's going to go way up, and Oasis is going to go way up. OAS is the stock symbol. Going to go way up, and it's going to take years. It didn't go down in days or weeks or even months. It took years, so it's going to take years to go back up. Real briefly on gold. Is gold breaking down? Here's an area you want to watch, this 1081. I still say we got some left to the upside. Is it possible it's over and we're breaking down? Yes. But based on the weekly, still pushing up, I think, Stacy, we're not quite finished to the upside yet. So this nice little pull down is the daily depressurizing, Andres. This is what we're talking about. My daily's depressurizing and my weekly's not flinching. Turning over, but yet the weekly hasn't flinched yet. That's number one. And number two, we have not crossed below an area we shouldn't have. So let's go back to that picture. I'll pull this into perspective. What is that, Gary? Well, if this is part of this correction, my one green, WXY, two green, and part of this Y up, we have an A, B moving higher in C. And so far we have a 1, 2, 3, 4 correction. My wave 4 correction should not go into the area of wave 1. So we should see price honor staying above this 1081.64. It came close, but it rejected off of that so far. And as long as I stay above 1081, I'm going to look for further upside. Why? Because even after these multiple days of downside pressure, and yes, we've moved down nicely from above 1100 to 1080 range. That's nothing to sneeze at, right, Marty? It moved down as my daily's turning over. but we have not invalidated this 1, 2, 3, 4 scenario. And as long as it stays above this 1081, I'm going to look for this to go back up. What do we need? We need our time frame to cycle. We need our time frame to cycle. Right? So while my daily's depressurizing, turning over, and so far my weekly saying no thank you, I'm not ready for this. I still need further movement. Well, if it doesn't turn over, right, Andres? If this doesn't turn over and engage down, let's do it with the big red cursor. If my trend momentum and PAI that's depressurizing to the upside doesn't flip over with the daily depressurizing, which so far is straight up, hadn't even flinched to start changing angle, much less hook over, as my daily's moving lower, what do we expect the daily to do? Turn and go back up and make a run back towards my 61.8, perhaps, bottom of the cloud. Make another push higher to finish this correction, then push lower. So in closing on gold, take profits to the downside. My bias is we're going to go back up here first, then we're going to reverse and go down. Well, what if it's the case where it's not going to happen that way? Then as the close of the market this week, open of next week, I'm going to check the weekly. Does the weekly start to turn and engage as my daily moves from overbought to oversold? Because again, it's a little premature to say that there's no way the weekly can engage yet. Because the daily, yes, it's been turning over, moving lower for a few days, but it's just getting started on the crossover. So Stacy, if this moves from overbought to oversold, my trend momentum, as it's crossing, getting close to cross, and it moves from overbought to oversold, then that weekly is likely to engage with it. Well, if not, then I'm going to look for this daily to turn back up, rally back up, stay above 1081, and rally back towards 1100, 1115, 1120 range, maybe the top of the cloud. At which point my daily's back in overbought territory. This turns and goes back in overbought territory. Then it flips over again and the weekly joins and engages down. That's when I'm expecting this to go breaking new lows and to continue our downtrend continuation mode of 1,000 and below. Any questions on gold? As long as my weekly stays pointing up, I'm going to look for 1081 to hold and price to run back towards perhaps the bottom of the cloud, or certainly my 61.8% retracement. Back towards the previous high and a little bit above it. At which point my daily is going to flip again, and it's going to be the second time around that it engages down. Andres, remember that 4-hour I showed you a minute ago on the S&P? First time the 4-hour turned over, the daily said no, forced the 4-hour to slingshot higher. Then the second time the 4-hour turned over, the daily did engage and the S&P went plummeting. Could be the same thing here, but on a daily weekly. My daily's turning over, but this first go around, my weekly says no, so the daily should then go back up. Then the second time the daily turns over, the weekly does engage, and we go plummeting down to 1,000 and below. So yes, there's a low probability that this A wave is done here, and we're in the midst of a 1-2, 1-2, and we're grinding higher, stair-stepping up, 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 and away we go. I don't think that's the case. It's a possibility, but a low probability. The highest probability is for gold to continue down, lower, as we move, finish the correction and move down to 1,000 and below. So as long as price remains below 1191, Gary, that's over $100 away. Marty, that's a long way to go before we invalidate this and start to confirm this A is done. We're moving up in B. So I do expect 81 to hold, 1081, rally back up, make a run at this previous high, a little bit higher, maybe that 61.8% retracement range. Then we flip over and head down. But everything is on the bearish side of the equation up until 1191 is taken out. So in closing, I'm going to use the bottom reversal for gold, and I'm going to look to trade GDX and GGN. But up until then, I don't think they're finished to the downside. If it turns out that we do end up breaking this, and we see these reversal patterns, and the weekly turns and continues higher, and the monthly then turns and continues higher, and yep, this A is done, and we go breaking 1191, well, we could still invest early in the game and go much, much higher. I think gold's going to go soaring towards 2000. Once A is done, B should be a deep retracement. It also depends on what type of ending correction this A is. If this is the big triangle coming down as we think it may be, then that B wave should be a very deep retracement, meaning it could run towards 2000, even a little bit above it before it's done. Everybody good? But I don't think we're there yet. I still say we're over here. I still say we got further to go before the big reversal and the move higher. But price will prove its intentions by breaking 1191 to go much, 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 much higher in the years to come. Otherwise, I still think we got several more months of downside pressure. Then we're going to get the big B wave up, and we're going to continue to watch 1191 to hold, and we watch this correction to move lower, breaking new lows, headed down towards 1,000 and below. So good day, good luck, God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Take one day at a time, one trade at a time. Don't force it. Wait. The biggest thing you can do is allow the alignment, then get in. And then take your profits along the way. Once I'm at Breathe Easy +1, I've at no risk of losing, and I can only let my winning trade run. How do I know to let it run, James? It's all based on the cycles. If I'm in a 4-hour foreman and workforce trade and I know it's going against my daily, then I know it's going to be a quick scalp and I want to get in and get out. Then when the 4-hour reverses back with the daily, I want to get in long. Yeah. But up until then, I still say that gold has further to the upside first before down. But price will tell us it's too early because my daily's just starting to cross. My weekly hasn't engaged, yes, but my daily's just starting to cross. So it could be that this is already over. It's structure-wise, WXY, that's certainly deep enough. It made a new high. It could be the end, and maybe not a 1, 2, 3, 4, 5 moving up. Maybe it's simply just this WXY is done. But what's going to happen? We're going to break below 1081 to start, and we're going to see the weekly start turning over as my daily moves from overbought to oversold. Then, yeah, it's over and we're moving down already. But other than that, I still think we got this to go, but I know what signs to look for. The signs we'll look for the daily, price staying above 1081, and my daily flipping and turning back up. As my weekly continues to go further, then the daily turns over, so that daily should flip and go up, slingshot higher. If I see that, Marty, am I going to buy the slingshot higher? Yes. So I'm looking to buy a daily slingshot up on gold. As long as price stays above 1081 and my weekly stays pointing up, I want to buy the daily slingshot higher. And whether we're down here and it engages, it should run at least to this 1115 range, and more likely should run towards about a 61.8% retracement. New higher high, then start the downtrend. So join us again tomorrow. We'll see you then, and thank you for your time and attention today. Take care.